So I'm going to go ahead and get started. Some of y'all might have seen that I hit the record button and the recording has started. So I'm just letting you guys know that we do that just in case there's nuggets of information that we want to go back and see if it were useful for us to learn, how to get better in presenting the information, certainly for myself and for everyone else. So the purpose of this class is navigating home ownership, the path to owning a home. Whoop, whoop. There we go. And I appreciate some of y'all being on here. There was a lot of response to this, and we want to make sure that the Eventbrite was simple for everyone to navigate. So anyone have any input? If I could maybe get some input back to that. I see some smiles. So Nick, y'all are smiling. Anybody can give us a little input about their navigation for the Eventbrite link or for Teams so that we can do it better. Don't all jump at once. And y'all are all muted, so you can unmute yourself. Everybody good? Oh, you're unmuted.
I had a pretty easy time. I just didn't know that I had to download the Microsoft Teams, so that was the only thing for me. But
so we might put that in our future link so that people will know. That's a good idea to make sure they do it in advance. Okay. And we had, I had a couple of text messages for technicality purposes too. So, okay. So navigating homeownership. So a couple of things. For those of you that registered and came on the call, we have an actual hardback book. Home Buying Guide is a hardback book, but we have this in electronic digital format. So the people that have registered came on the class, you will also get this in a digital format. Then the PowerPoint is different, but you'll actually get this in digital format. So that's good. Okay. And the purpose of the class is just to kind of navigate the path of home ownership and, be able to provide you guys some guidance and answer some questions as we move along in the process. So I'm excited to see some of our loan officers on the call. There's an opportunity at the end. I'm going to be able to provide a screen with their names and a QR code too. But I'm excited to see several of them on the call. Denise is the newest in our group, and she's down in Pearland. So hey, so I'm excited to have her here. So as we go through, everybody can see the PowerPoint. Okay, great. So I always like to start by thanking our veterans, and not just because it's this time of year, but just in general. I want to thank our veterans. This is my grandfather, actually, Don Schriever, and he fought in World War II. And then when he came back from being in World War II, he established a life. He didn't ever even see my dad until my dad was like 2.5, 3 years old. So when he arrived and everybody said, "Hey, this is Daddy," my dad tells a story how he ran upstairs and grabbed a picture of his dad and said, "No, this is Dad. You've been telling me for years before I go to bed, a couple of years, that this was Dad." So he, in the life that I knew him in his adult life, he was a school teacher. And I have such a great deal of respect for school teachers because I think the word when he was in Waco, Texas, where my grandparents lived, as a school teacher, when I would visit his classroom and all the high school kids would secretly give me candy and all that stuff. I think when he was teaching school and when our teachers are teaching school now, that the words duck and cover meant something completely different, so I have a tremendous amount of, respect for him and for his work as a veteran, but also his work as a teacher. So we want to thank our veterans. November 11th is Veterans Day, and Military Family Month is November. And Premier Nationwide Lending always provides $500 towards closing costs. So I always want to remember to tell everybody that. So this is my life outside of the mortgage business. I have a daughter named Landry, and she just turned 11 years old. And my husband, Ben, and his son, Zachary, serves in the Navy Reserves. If not for the Navy, Ben wouldn't be here because his parents met in the Navy, and he tells a nice story about that. So that is us at the compound base in Mississippi, where it was a bomb shelter where his graduation was. And I was like, what, who would want to bomb Mississippi? That's kind of one of the things I thought. Like, I don't understand. Then I always share this picture because I'm an advocate and I'm passionate about it. Like, I started talking about home ownership at 8 o'clock this morning in front of the Greater Louisville Association of Realtors, which is where I saw Haley and Nick. That's where I saw your dad, Greg. I always show this picture because this is the house in Arlington, Texas that I was raised. My parents rented this childhood home for 19 years, and it looked really different when I grew up there. But that tree is the same, and what the things that I would tell you about what I shouldn't have, that boy I shouldn't have kissed behind that tree. Just gonna say. So I think about all the things that I would tell myself now, but the biggest thing I would share with you guys is that not when you think about 19 years of renting a home, that's by the standard of expense, they spent $496,000. So when people come on the class to understand and have a perspective of navigating home ownership, I try to explain that the gravity of that, because for those of you that have kids, you understand that the time just moves by really fast. We'll wait 6 months, we'll do this, and 6 months turns into 6 years like that. My daughter just turned 11. I can remember when they brought her to me. I was fortunate enough to be able to adopt. They showed up they showed up. That's a big dog barking. They showed up at my house, and they were there for 20 minutes, and they left, right? I signed some papers, and all of a sudden I was an instant mom with a 12-month-old child. And time has just gone by so fast. That seems like yesterday. So as a homeowner, that's the same thing. We get into this situation where we're renting, when we really ought to sit down and just let's make a plan. Not everybody is ready right now, but you can get ready, and that's the purpose of this. Because even my parents, began later in life to own a home, and my mom is 82 years old, and she still lives in the same home, the only home they ever bought today. And if she's known anybody for more than 5 minutes, she has shown her granite countertops to them. Let me just say. So I always like to share that house. I also shared a bathroom with my brother. We don't want to talk about that. So that wasn't really a stellar experience. I always provide the disclaimer. In order to make a mortgage work, in order to get everybody to be, for it's all to work, it's one big happy team. So you have a lender, you have title companies, you have insurance companies. It's kind of like baking a cake. So we want to bake a great cake of all of the various people that are involved in the process in order to get you to the finish line. We have great referrals, we have good real estate referrals, we have good insurance referrals, but we don't own them all. And so we always have to just give you the disclaimer about the fact that we run a mortgage company, and that's what we're responsible for doing in terms of how to help you. I just always tell we're certified. There's a lot of really experienced loan officers on the call. Our company knows how to do conventional, VA, FHA, jumbo, first time home buyers. We're definitely accredited, and just enjoy providing education and information. We talk to people every day about investing in their future. The discussions on the topics that we talk about is, should I consider buying a home? Am I able to buy a home? How do I get started? The path from loan application to home ownership. How long does that path have to be? I get that question a lot too. When people do a loan application, sometimes the question is, how quickly can I get, an approval? Or how quickly can I get a letter? Or how quickly can we close? And when you don't know, or you've never done it, you're not sure exactly how do you get from point A to point B. And you really want to be able to be hand in hand with professionals that can take you from point A to point B. When you're doing an initial application, you're going to enter some information to your history of where you've worked, or to your history of where you've lived, and then that starts the initial process. With Premier, our credit report is good for 120 days. And so we're not having to pull again. So if we pull that credit report, if you purchase something within that 120 days, then we don't have to pull the credit again. So let's talk about rent versus buy and compare the cost. I gave you a personal experience, with my childhood home. So that kind of gives you the math. But one of the things, the cost of renting, I just used this slide to make sure that people understand the cost of renting and the money spent after renting 1 year, 5 years, 10 years, and 15 years. I sometimes get people that will say, well, I want to wait until I can buy what I want. And I respect that and I understand that. I think sometimes we get in a situation where we want to live like our parents live, but not understanding the fact that they didn't live like that at 20 or 25. So sometimes we have to, crawl before we walk before we run. And in terms of like money spent, we want to make sure that we have, that the scale over time. I mean, I've had a lot of conversations lately with people in their rent, and I have to put it in perspective and tell them, okay, so your rent is this much. You're spending $30,000 a year on rent, $25,000 a year in rent. If they're paying $2,000 a month for rent, that's $24,000, or some variation, of that amount. So we just have to put it in perspective. Again, it's about having a plan. The home value over time. I do get this question a lot, like with our area, like how the houses appreciate and value, estimated future home value. And this is based on 200,000. We could plug in 400,000, 500,000. But what we're fortunate is that we live in Texas. Can I get an amen? Woo woo. We live in Texas. So what's great about the fact that we live in Texas is our values are consistent over time. Our values continue to appreciate and grow, even in a market that feels like it's stalling just a little bit. And if you watch the news, that it's doom and gloom, right? It's not doom and gloom. People still have to have housing. People still have to provide their kids with housing. So it's not doom and gloom. But what I try to explain to people is the appreciable value that we've experienced and that we will continue to experience in Texas makes it a good investment regardless. And this is just a slide that kind of tells you over the course of 15 years. The house that I own in Flower Mound, I've owned that home for almost 20 years. And I can tell you it's appreciated in a whole lot more value than the 401k. So it's made for a good investment. In our area, Dallas-Fort Worth area is great. There is the Houston area has been very successful. And I would say this for Kyle's benefit, even Abilene has appreciated in value. So there you go. Am I eligible to buy a home? People ask that question gets asked a lot. Am I eligible to buy a home? Well, these are the factors that go into that consideration: credit, down payment and closing costs, debt to income. But I'm just going to take a quick minute. Is there anything in the chat? I want to make sure because I can't see the chat. I got a thumbs up. So factors that affect your credit score: paying your debts in a timely manner. I cannot say this enough. I was at a lunch today and there was a discussion at that lunch about credit and payment history. And 35% of your credit score, when you look at this pie chart, 35% of your credit score is paying your debts on time, and or anything that your monthly obligated debt is that you're supposed to be paying is paying that on time. Paying your debts in a timely manner, that is like, it's just it's huge, because what we think is, I just have one thing late, I just have two things late. And what you have to look at is payment history is an ultimate reflection, because the best predictor of the future is the past. So if the lender is lending money, they want to know that you can confidently and competently pay things on time on a regular basis. So keeping your account balances low compared to your approved credit limit, and that's the 30% amount owed. A longer credit history can increase your scores. Good management of revolving credit. opening new credit accounts or credit inquiries can negatively affect your credit score. So let's talk about that for a second, because I get that. Well, when I apply for a mortgage, is that a hard hit, a hard inquiry on my credit? And the answer to the question is yes, because we have to be able to look at it with the correct mortgage code. And it's not that one inquiry that causes you an issue. That's not the issue. The issue is that when you have multiple inquiries from multiple different codes, that's the problem. So what I mean by that is that you went to you applied for a mortgage, then you went to Kohl's, and I like Kohl's. That's why I use Kohl's as the example. But Target is an example. You go there and they go, we're going to give you a 15% discount. How many have fell for that? We'll give you a 15% discount if you'll apply for our credit card. Nobody's raising their hand, but I know you have fallen for that. And that, all those things. And then the all-time worst is if you're going to go buy a car, you want to secure the purchase, or your money to secure the loan before you go to the car dealership, because the car dealership is going to create multiple inquiries because they don't care. They just want to figure out the best, not the best loan note for you, but the best for them, because they're selling the paper. Does that make sense? So what happens is somebody goes to buy a car, and then the next month they go to apply for a mortgage, and the mortgage professional pulls it up and there's like 15 or 16 inquiries, and you're like, whoa, wait, hold on. So that's what impacts the credit score more than anything else, is multiple inquiries and different inquiries from different entities, installment debt, revolving debt. And what happens is the FICO score says, oh man, this person's trying to accrue a bunch of debt, a bunch of different kind of debt all at the same time. That makes sense? And so this is just a really good, I love this pie chart because it does kind of give a little bit of perspective on how to keep your credit and your credit history and credit limit. The other thing I give an example on is, just because you've given a limit, like a credit limit, if your limit is $5,000, just because your limit is $5,000 doesn't mean you should go spend $5,000, $4,999, right? You don't want to do that. And well, that will negatively impact your credit because you're maxed out. You have gone to the limit on all of what is available to you. And I hope that's resonating a little bit. But recently I purchased a what's called a tough shed, for storage, and I purchased it at a Home Depot, and I had a certain credit limit, so I didn't want to be over 33% of my max. So I paid cash for part of it, and I had 18 months interest free. So I put the rest of it as an interest free. That way I'm utilizing credit, which helps my score because I'm utilizing, right? So that's a good thing. And I'm paying it on time every month, and I'm splitting it out. So I have no interest on what I purchased, but I'm using credit. A lot of times too, I was in a conversation today, and she's got a 22-year-old, and she was trying to explain to the 22-year-old, go buy gas, use credit, go buy gas, and then pay it off. So then there is some usage there when we're approving people for a loan. On time credit history, paying things on time is crucial, but also their history. So even if you have no balance and it's not a card that you think you want to use anymore, you don't cancel it, because the history of that credit and having that balance or that accessible credit is also helpful. We've had situations where we had decent credit and the debt to income ratio was decent, and we couldn't necessarily get an approval because the credit was thin. And what that means is, when you hear that term, is that there was only 2 trade lines, or there was only 3 trade lines, and they were 6 months old. So the longer the history of the account, the better off it is. Any questions? Do you know what's on your credit report? So if you want to know what's on your credit report, if it's reporting anything erroneous, you can go to ftc.gov, or you can use this QR code, and then that will allow you to figure out what's on your credit report. Not so much about what the score is, but what is on it. What if you looked at your report and it was reporting that you owned a car that you have never bought or never owned. And then next month you're like, okay, I'm ready. I'm gonna go buy a house. And a mortgage professional pulls it, and we look at the credit and we're like, okay, so what's the deal with the car payment? And you're like, I don't own a car. So knowledge is power, right? So we want to be able to know, so you can pull here and just to look and see what's on your credit report.
Stacey, do you mind if I say something?
I don't mind. Who was that?
Valley.
Oh, hey, Valley.
Hey, I just want to say it's just so important. And most people don't realize how important really is not just looking at your credit just because you're trying to buy a house. I mean, even if your credit is bad, people want to steal your identity. So monitoring your credit is just important regardless. I mean, I just cannot stress that enough. People wait until it's time that they want to do something, then realize they can't do it because now their credit has been impacted, whether you did it or someone else did it. So I just wanted to say how important that is. I just wanted to jump in here and say that. Sorry.
Oh, no problem. No problem. I'm going to send somebody this link. Identity theft. So like right now, the number one target for identity theft is kids from foster care. So when I adopted my daughter Landry, her identity in previously had been stolen. So I had to start with a whole new name, a whole new social security number. So foster kids' identity is very much stolen when they're in different foster homes. It's not great. And the elderly. So, and people who have passed away. So that is a huge identity. So when people have passed away, someone will try to take that identity, and then get credit with that identity. Recently, some of us loan officers recently were in class with Juliana Brock, and she was explaining that that's the reason why you freeze that credit of a deceased family member. So the next avenue I want to talk about is how much do I need for a down payment? And a lot is all, this is discussed a lot. And in July, Val was there. We did a communities and schools event, and there was 150 people in the room. And we did asked a question in the room, which was what is the minimum down payment for conventional financing? And when I asked that question, I was shocked that the majority of the people in the room, that they said that the minimum down payment was 20%. So the minimum down payment for conventional financing was 20%. I was shocked because that is not the case. And I think there's a lot of people that are hesitating and pulling back and not stepping in, put their toe in the water, like your friend is next to the swimming pool and you want to just push them in. I think there's a lot of people that are not doing that because that's holding them back. The myth of that, the thought that they have to have 20% to purchase a home, is preventing them from stepping forward. You don't have to have 20%. The minimum down payment for conventional when purchasing a home is 3%, especially if you're a first-time home buyer. For FHA is a government type loan. A lot of first-time home buyers use it. If you have credit that is, young credit, like I was talking earlier, the history of credit, or if you've had some bumps in the road, it allows for a lower credit score. If you've had a few bumps in the road, maybe you went through a divorce, maybe you just, maybe you went crazy with your credit cards in college. Nobody's ever done that, ever. Whatever it might be, FHA allows a little more forgiveness for the credit score and the debt to income ratio, and it only requires 3.5% down payment. VA loan is 0%. VA loan is absolutely hands down probably my favorite loan. It's 100% financing. We help people do what's called a certificate of, look up their certificate of eligibility as long as they have their DD-214s. We look up their certificate of eligibility to determine their veteran entitlement. So I do hear from I talk to a lot of veterans that are like, oh, I don't want to mess with the government. That's too complicated. And I get that, but we try to take the complication out of it. There's no mortgage insurance premium on a VA loan. So if you are a veteran, that's something we want to definitely take a look at. USDA or qualified rural areas. Now, the way that Texas has grown, And my experience over the last 20 years, for example, Weatherford used to be USDA and now it's not, right? There are certain areas of Sherman, Texas that are still USDA. I was shocked when I looked up a map recently. So it is property specific, area specific, zip code specific for USDA. They are specific on debt to income ratio and a few of those things, but we're happy to do them and we do them well. Closing cost and prepaids. In addition to the money that you need for down payment, there are other costs to consider. And one of the things we put in here, when we were talking about, we put a placeholder, keep in mind 6,000. That was based on 3% down when we're talking about 200,000. But obviously loan amounts have gotten bigger, purchase prices are larger, things like that. So whatever it is, I always tell people that they, at the very least, when it's all said and done, they need to have 2 payments in reserves that the underwriter can show, that you have enough money left to make 2 payments after it's all said and done. But the cost for purchasing a home, those costs can be paid in 3 ways. The borrower pays them, the lender pays them, or the seller can pay them. And so let's talk about that for just a second. So the cost of purchasing or closing costs, down payment, your taxes, your insurance. So borrower pay, putting the money down and bringing their closing costs. A lender paid situation is in some cases, the interest rate is a certain area and that interest rate could be an eighth or quarter higher. And then we'll are able to cover some of the closing costs. That's not the most common used thing right now, but it has happened. And then seller paid. And I know that Val and I talked about this recently. 6 months ago, no way, the seller wasn't paying for anything. And now suddenly I'm getting contracts where the seller is paying for the title policy. They're paying for the survey, or we're using an existing survey, or they're providing some type of seller concession. I've got a loan that's closing on November the 10th. There's a $3,000 seller concession on there, and he's a first-time home buyer. So it's a huge, huge help. Closing costs can consist of the escrow fee, or we call it attorney or closing fee. If you're going to, in Texas, we use title offices, appraisal, title insurance, and the recording of the documents, your deed of trust and your loan note. We collect 12 years of homeowners insurance. It's 12 years. I'm sorry, 12 months. Everybody just had a heart attack. 12 months of homeowners insurance. And then what then happens is that if you close on a loan in November, your first payment won't be until January. So if you purchase a home in November, you don't have a December payment. Your first payment is January. And then every payment January going forward for the rest of the year goes into your escrow account. And then a year from that closing, from that account is paid your insurance and then your property taxes. And that's what an escrow is. It's collecting its principal, interest, taxes, and insurance. So that payment you're collecting right there. So you have daily interest. And then paid outside of closing, I talked about it before. Everybody should get, for the realtors that are on the call, I think they would all agree, you should get a home inspection. You want a home inspection for your property. That's paid outside of closing, has nothing to do with closing disclosure. And then again, if the property in Texas, you have to have a survey. So a survey of a property is lot and block and the legal description of the property itself. And in Texas, you got to have one. So if they have one, if the borrower has one and it's approved through the title company, we can use it. All right. Any questions in the chat? Where will the money?
Survey.
Sandra, you have a
Yes.
question?
Yes, for the survey, do we have to find the company that does the survey or the realtor?
In most cases, no, in most cases, we have surveyors. Like in certain areas of Texas, it works a little bit differently. Like in the Dallas-Fort Worth area, or where are you from, Sandra?
Here in Dallas, Garden.
In Dallas. Okay. So in the Dallas-Fort Worth area, most of the title companies have relationships with surveyors. And when we request a survey or order survey, then they will place that order. In our group, we have an office in Lovekin, And in East Texas, the title companies don't order the surveys. And then sometimes when we can go directly to the surveyor and get that order, but we'll have someone, that's not something it's a first time home buyer you would have to do. We would do that. But sometimes those surveys have to be paid outside of closing. Then you would be invoiced and we would work that out. But again, if a seller has a survey and it is a survey that is usable, then that's a good money saver, because that piece of paper can be, that's a $500 piece of paper. I think Kyle would agree with that, and Val would agree with that from their experiences, right? So it's a pretty important piece of paper, and we'll try our best to minimize expense when we can. So if there's an existing survey and it's something we can use, we'll try to do that. So where will the money come from to purchase your home? Everybody okay? That helps, Sandra?
Yes, thank you so much.
You're welcome. Checking and savings accounts. So we'll get a 60-day balance on your checking and savings. We like to do this through our system, automated system called Account Check, or statements. But checking and savings accounts, that's where money can come from for your down payment. Gift funds. What are gift funds? Gift funds, if you have a relative, a mom, a dad, an uncle. I've even had employers, people that want to help their employee and provide gift funds. And we provide the information on how to document that appropriately. You don't want, if someone's got gift funds that they want to help provide you for the purchase of a home, if you can, not necessarily put them in your account and allow us the opportunity to give you advice on how to properly document it, that would be better. 401k. Some people have a 401k and they don't realize that that's their money, and you can get a loan against your 401k that you can use towards the purchase of a home. There is terms of withdrawal on your 401k, and terms of withdrawal allows you to do what's called a hardship loan. And a hardship loan is if you own a home and you've lost your job, you can get from your 401k, or if you're a first-time home buyer, you can get from your 401k. I've worked with a lot of people that didn't realize that they could utilize their 401k prior to retirement. So that's a good source. Cash value of life insurance. I literally closed a loan last month where the gal had her parents had bought a life insurance policy for her when she was a baby, and it had not increased in value, and it was about $3,000. It was a very small life insurance policy, so she was able to cash that in and use the cash value of that life insurance policy that wasn't accruing in value. So it wasn't like it was going to be a bad, like she was not doing anything bad with the investment. But they had it. They'd forgotten they had it, remembered it, and she was able to use it towards her purchase of a home. Val will tell you, we lean in. We love down payment assistance programs. If there is a way or an avenue where you qualify, one of the ones that we really like is TSHAC, Texas State Affordable Housing Corporation. Their website is tsahc.org. It is a wealth of information. On that website, you can even fill out what's called an eligibility quiz. And the eligibility quiz is awesome information because it tells you if you're just entering a little bit of information for like a minute, not personal information, not social security numbers or nothing, but you're putting some information in there about your current situation. We love that program, not just for first-time homebuyers, because anyone can qualify. It has to do with credit score, and your income limit for the county that you're buying in. In Texas, in the Dallas-Fort Worth area, if you are making 100,000, I'm just going to use 100,000 as the figure. Your household income, or individually 100,000 or less, you have a 620 credit score or better. And it doesn't matter if you're a first-time home buyer or not, then you can qualify for that assistance program. And it just helps a little bit. It doesn't negate your responsibility of having savings. You got to have some skin in the game, but it does help. It's a hand up into the process, not a hand out, but it's something to consider. And Val, you got to say it. You want to be the Lord of your land, not your land. Say it again. Say it. Say it. I love that phrase. You gotta unmute yourself.
So if you follow me on social media, I'm always good for saying to fire your landlord and become the lord of your own land. Because honestly,
Whoop,
at
whoop.
the end of the day, you're paying somebody's mortgage. It's just a
Yes.
matter of when we can get you in a position where you can pay your own. So it's never about pressuring people. It's just figuring out when's a good time for you, because you're paying somebody's mortgage if you think about it.
There you go. Sale of personal property. So we have all had that per item we might have purchased. You know, some people have collection of boats. I'm not saying who that might be. Some people have bought a motorcycle that they probably should not have done, or different items. And so you can have a sale of a personal item and use that towards the purchase of your home. If it's an item like maybe it's a car or an old car that you inherited or something like that, we just need to make sure you have a bill of sale so we can show the bill of sale in relationship that you owned it, that it was your right to sell it. And that, I mean, I definitely have had that where somebody said they sold something and they didn't own it, so they couldn't really sell it. So we have to show the path of the sale of that piece of property. Again, I mentioned employer assistance programs. There are employer assistant programs. I did a loan for a guy that worked for FedEx, and FedEx had an employer assistance program. He investigated, it helped. So sometimes they have a matching program. I will say this, we did a preferred partnership with communities and schools of the Dallas region, and they created collectively, we created a program that provides a benefit to the employees that work for communities and schools, gives them an additional $1,000 down payment, or towards their bottom line, and a couple of other benefits. So sometimes employers want to create programs for retention purposes. We have that embedded in our program, and we can use that if you guys have companies that are looking for something like that. The IRS tax refund. I always talk to people about them filing their taxes, and when the tax refund comes back, don't go to Vegas. You put that in your savings and use that towards the purchase of a home. It's a great paper trail. I love talking about second jobs this time of year, because when people are trying to save, we can't use the second job unless you've had it for 2 years as a source of income, but we surely can use it as a source of assets. So this time of year, sometimes with the holidays and so forth, people need, somebody to work 10 hours or do this or that or whatever. And that is a second source of income that you could utilize and be saving that money towards purchase of a home. And the last thing I want to talk about, mortgage credit certificate. So a mortgage credit certificate is not necessarily where money will come from to purchase a home, but a mortgage credit certificate is something you can qualify for that will help to increase your balance or your income, because it has to do with your W-4 and your take-home pay. We love mortgage credit certificates, and I just want to be able to mention it here, because if you're working with a lender and you ask them about a mortgage credit certificate and they don't know what it is, you probably need a new lender. I'm not trying to be offensive. I'm just being truthful. So how much can I afford? I get this question a lot. How much can I afford? And here is a very good debt to income ratio or debt to income analysis for you guys. So debt to income, total monthly obligated debt divided by gross monthly income, and a nice pie chart. So real quickly, I want to say this. I might have $5,000 my balance on my credit card might be $5,000. And then Anthony's balance might be $5,000, but his monthly obligated debt on that same $5,000 might be $150. And my monthly obligated debt of my monthly payment might be $300. So our balances are the same, but my debt to income ratio is going to be higher because maybe my interest rate on that card is higher, or whatever the terms are. But as a lender, what we care about is, what is your monthly obligated payment? That's what we care about, monthly obligated payment. including the new mortgage payment of what that's going to be. So I use this example, your combined monthly income of $8,000. Typically, we try not to be, especially with conventional, typically, we try not to have a debt to income ratio more than 45%. Have we done a loan with a debt to income ratio of 50%? We sure have. Have we done a loan for a veteran where the debt to income ratio was 55%? Yes, we have. But just for this math and this purpose, the back end ratio or debt to income ratio is explained here is at 45%. So 8,000 times 45% is $3,600. The credit card, in this example, if someone has credit card bills and those are $200 and they have a car payment that's $300. By the way, I haven't seen a car payment that low in a long time. Just going to tell you. A lot of people with a lot of high car payments. Student debt, student loan debt, $400. So their total monthly obligated debt is $900. So their monthly debt allowed for 45%, 3,600, less the total debt is 900, means that their housing allowance, their housing, principal, interest, taxes, and insurance cannot exceed, in this example, $2,700 in this example. Now, you can see the pie chart there, and it's divided it out if that's easier to see, 2,700, 200, 300, and 400 for the various things. It's just an example. We could use this example. I was working on a loan yesterday, and his payment, because of other debt and income, his payment could not exceed $1,595, right? So that his mortgage payment, principal, interest, tax, and insurance could not exceed that in order for it to mathematically work. Is there something in the chat?
Yes. Does gross mean before taxes or take home?
Yeah, we do it's not take home, so we'll do the gross. So on your W-2, the section number 5 in your W-2 is what we're going to use to qualify. What you make hourly or what your base salary might be, that's what we're going to use to qualify prior to the tax. Ooh, I got a thumbs up. I love that, Haley. I love that. Okay, we're in the home stretch. What's included in my monthly payment? Principal, the amount borrowed to buy your house, the payment goes to the house, and when it's due. And if the payment is due on the 1st, when do you send it? Before the 1st. Okay, so if it's due on the 1st, it's due on the 1st. It's not technically due on the 2nd. So I just wanted to say that because I know a lot of people go, oh, it's due on the 1st, but I have till the 15th. Technically, if it's due on the 1st, it's due on the 1st. Okay, there's no technical, it's due on the 1st. Okay, so interest, percentage of principal based on interest rate, payment goes to the bank. Taxes, property taxes. And with property taxes, we want to file homestead exemption. So the property taxes aren't as much. And then insurance protects the house against fire, flood, and anything catastrophic. And we have to show that the house is insured before we can provide you with a mortgage. The only other thing that's also included in your monthly payment is mortgage insurance premium. And mortgage insurance premium is when you don't have 20% equity. So mortgage insurance premium protects the lender should someone default, and then the borrower pays the mortgage insurance premium when they don't have 20% equity or put down 20%. Again, you don't have to put down 20%, you put down 3%. It will have that one more added thing: principal, interest, taxes and insurance, and mortgage insurance premium. How do I get started? Typical items that we need for pre-approval are pay stubs over the course of a 30-day period. And we have an automated system. So many things that we look at, we do automated, like employment verification, and then we also verify income. Every once in a while, we need to get 30 days worth of pay stubs. So if you're paid semi-month, it's 2 most recent pay stubs if you're paid bi-weekly. And that pay stub also has to show year-to-date earnings. If you're self-employed, we always will need 2 years tax returns when you're self-employed, because we got to be able to look and see all of the variations of what, we with self-employed, sometimes people will say, well, I make 100,000 a year, but they were really only paid taxes on 10,000. So we have to take a look at it. W-2s, 2 years W-2s, a photo ID that's not expired. You have to have a driver's license or a passport, and it can't be expired that we need. Most recent 2 months asset statements for all accounts used to qualify. So if you have, I'm sorry, I didn't mean to do that. Okay, so if you have again, we use an account check system, which is an automated system, so you don't have to mess with a bunch of statements. But we want to use all accounts, show all accounts, even if it's money you don't want to use. So I'm working on a loan right now, and he has a Charles Schwab account, but he doesn't want to touch that money. And I might just show that as reserves, to at least show what's accessible to him, but we don't necessarily have to use that money. So sometimes what happens is, well, as first-time homebuyers, sometimes people will hold back and they won't share something because they don't want to use it. Well, just give us all the information so that we can help. Premier Express is a program that we incorporate for loan origination and to move the file quickly. Some properties, when you put down 20%, some will provide an appraisal waiver, which is a good thing, where we stipulate to the value. That's won't be the case if we're doing the minimum 3% or 5% down. This is a caution. During the loan application process, it's important not to do these things. Don't change employment. Talk to the loan officer. Tell them what's up. Tell them what's going on. You don't want to have a significant increase in your credit card balances. Don't go to the furniture store. Please don't go buy furniture. Let us close on the loan first. You don't want to have a reduction in your asset balance because you decided to give your sister a loan or something like that. Failed to disclose all debts. If you have a debt and you owe a debt and it's not on the credit report and you're aware of it, you should let us know. If you're making child support payments, that is a monthly obligated debt. If you should tell us, because eventually it may come out and we'll see it somewhere else. And so you should tell us. You don't want to apply for new credit. You're in the middle of a mortgage or getting pre-qualified. Don't apply for new credit. You don't want to make large undocumented deposits that we can't see the flow for. You don't want to change banks, and you don't want to move money from one account to the other, or co-sign a loan for someone else. All well-meaning things that we love to do for our family sometimes gets us in trouble. Can I get a little heads up on that? So don't co-sign a loan. Having your own realtor is so important. So I have some realtors that are on this call. I saw Pamela Shelton. I see Kyle. I saw Val. So I'm so glad that they joined us. And I know we're running tight on time, but I cannot tell you how important it is to have a realtor do these things for you, help you find a home, explain each part of the contract. You're entering into a contract. You're entering into an agreement. You need their help. You want them to negotiate and present the offer and take the emotion out of it so that they can put you in a position where you're purchasing something and you're not buying something more than what the value of what it is. They can guide you through home inspections. They get them scheduled for you. They can communicate with the seller's agent and the title company, and they can schedule your loan closing. They can also hold open houses and do, when if they're doing a listing, they can take you through open houses. It's also a safety thing. You want to do this with someone that has a real estate license and let them help you navigate this process. I mean, it's just huge. It's crucial. Myself, Anthony, John, we all work with some fantastic realtors, and we're going to put you in some good hands. From contract to closing, purchase contract, loan estimate, and initial disclosures. This just kind of gives you a flow to the whole thing. when we get a purchase contract and we disclose and we lock a rate, processing and underwriting, during that time is when we order title work, we set up your insurance, we order appraisals, we send it to the underwriter. And then the way the calendar works is when we have a clear to close and we send out the initial closing disclosures, then we wait 3 days. So I've got a closing disclosure that's going to go out on Monday, and then I can close on Thursday. Thursday is November the 10th. I don't know what the date is on Monday, but Thursday is November the 10th. So that's that. And then we have closing day. One quick thing I'm going to say about closing day. You have to go to the title company and close or use a mobile notary. But most of the time, the best way is to go into the title company. And I've had people say, oh, I can't close during the day because I work. But we have to plan for that because the title companies that they work during the day as well. So you sign documents, the loan funds, and you move in. Can I get woo woo on the move in? There we go. I see something. Is there something in the chat? Anything in the chat? No? Okay. This is a podcast about credit. So if anybody wants to take a picture for later, it's a 30-minute podcast that I did just talking about credit. It's something that you can easily listen to driving in the car. And then we're a leader in lending. And I put everybody here that I thought would be on the call today. The NTFN has 3 mortgage companies: Premier, Park Cities Mortgage, and North American Mortgage Company. I know I saw Elise earlier. Elise represents Park Cities Mortgage. And these are all our QR codes where you'll be able to reach us if you have any particular question. Deanna is licensed in Oklahoma and Texas. Ken is in Spring. Philip is licensed in Texas and Louisiana. Again, Elise works in our Park Cities mortgage office with Claire Richard and is crushing it in Dallas in that particular area. John lives in Carrollton and is growing his market there. And then Denise is our newest person who lives in Pearland, who went to an association thing in Pearland today. So there's a lot more of us than that, but that just kind of gives you some of the information in terms of the products and brands that we offer and people on our team. And then if you have any questions, we always ask for you to leave us a review. We ask for you to follow us on social media. We're on Facebook, Instagram, also LinkedIn. There, and on YouTube, I have a Stacy Lynn Mortgage channel, and there's all kinds of interviews with different professionals that I put on that. And we ask everybody to just kind of lean in, and we appreciate your time. I'm going to go back to this screen, and if there's any questions, we've got a few minutes left. Any questions that anybody has, or anybody that want to jump in and say anything, have at it. Here we go. Anybody got anything? Elise, you got anything?
Nope, you covered it, Stacy.
I feel like I talk really, really fast, y'all. So
no, like you covered it all like you always do.
there you go. So, Ty, I'm going to answer your question. Yes, John is licensed in Georgia as a loan officer, and you need a realtor in Georgia, if I understand that. Anthony, in the chat, if you'll put my email address and website, or if you've got an email after the thing, if you have an email with any kind of question, then I'm happy to answer that, and or even forward it to someone that can answer it if it's something I can't answer. But we have different states that our team is licensed in, and so we can help with that. Or if you need a realtor for that area, we're happy to help. And then Sandra has her hand up. You have a question?
Yes. Do you recommend do couple of, what do you call it? Do we like inquiries with different lenders or a couple of lenders? Like when you shop for a car, you kind of go to one bank and then verify with another which one has the best interest. Do you recommend that for buying a house or no?
I mean, I am a lender, so I'm going to say we're the best lender, of course. I will tell you that even today, I was visiting with someone this morning that had an estimate from another lender, and I was happy to review it. And, you know, I'm a licensed professional. So if I see something and I think it's a pretty good deal and it's not something that we can improve, then I'm going to be honest and I'm going to say, if they can lock the rate this way and give you what they're saying they can give you, then this is probably a good deal. I've done that, you know, many of time. Now, I've also been very clear that if it's not a good deal and it's they look like they're being bamboozled or something like that, then I'm going to point that out. I will tell you the collective experience of everyone on this call, that, you know, is, you know, I don't even want to say, like, probably 30, 40 years of mortgage experience. So we're going to take great care of people. And, you know, you can have you can go and get a couple of opinions and have a mortgage company do an inquiry, two different mortgage companies do inquiry over the 30-day period, they're all going to get the same score. It's not going to bring your score down if you want to get an opinion, more than one opinion, a first opinion and a second opinion. I don't believe that you should just do multiple opinions, but it's fine to get a second opinion. That's a great question,
Good deal.
Sandra. I appreciate it.
Yes. Oh, and thank you for answering.
You're welcome.
I was, of course, online. I found the website Own Up. Have you used it? Had any experience with it?
Yeah, I'm not familiar with that. Own Up. I will say that I'm a big fan, and I said it this morning at the Realtor event I was at, that, you know, you really are better to use a local lender, local to Texas, and a local lender. And I make this joke, but I'm not really joking, is I'm within choking distance, right? You know, if it doesn't go well, I'm close by, right? Or our offices, the Park Cities office in Dallas, they have a beautiful office there. You can sit down with someone and go over stuff. Our corporate offices in Plano, our branch office in Flower Mound, our office in Spring. I mean, we have offices where people can come in and understand what they're doing, or we can have a Teams meeting like this where you can see someone face to face. I've been helping a lot of people. John here moved from California, and the California is exiting for Texas. They're all coming here. And I've had a lot of Teams meetings with people where they could see and talk to me face to face. And I was surprised and shocked to hear how many times they have been wanting to do that with other lenders and those lenders weren't available. So you want to be able to find someone that can work after hours if they need to, or that they can sit down and go over documents, either Teams like this virtually or potentially in person. Also on our team, we attend our closings. So if I can, you know, John's been to one of my closings. I can't go. Anthony's been to one of my closings. If we can attend a closing, then we're going to go so that we can sit side by side with you. On internet lender is not going to do that. So any type of internet lender that's not, they're not prone to being able to do that. I don't know what the realtor's opinions are on that, but good questions. I like
Thank
it.
you.
I can give you my
Thank you.
opinion
Thank you so
on that,
much.
Oh,
Stacey.
Pamela, we can't see you, but we can hear you.
Um, I tell my clients, please do not go with online because they work 9 to 5, Monday through Friday. They don't work on the weekend. Please go with a realtor. Please go with a lender that I know, because if I have to go to their home, we're going to go to their house. I want you to use somebody that I know, not online. Please don't use online.
I'm so glad that you're alive, Pamela, because that dog sounded very fierce earlier. So
she's
It's
a
okay.
rescue and she's very, very tiny, but she thinks she is 10 feet tall and bulletproof now.
There you go. There you go. There you go. Well, again, we thank you for your time. Again, we ask that you reach out to us and friend us on our social media. I don't want to go too much over because I know your time is valuable. We do a virtual homebuyers class the first Thursday of every month. So we'll have one December the 1st is the next one. That'll be from 5:30 to 6:30. So if you have someone that needs to be on it, if you want to do it again, I've had certain people be on the call more than once. I think Suki, I think I've seen you before. I'm not sure. So if you, sometimes it helps to get the information again. If you, trying to make the decisions about purchasing a home. If you have any questions and we can guide you in any way, please let us know. We're just one big inclusive family, and I'm passionate about it, man. I've been talking about it since 8 o'clock this morning. So, I'm on a roll. So y'all have a fantastic holiday. Gratitude for this season, attitude of gratitude for sure. And I hope everyone has a wonderful Thanksgiving, and thank a veteran. Go out and thank a veteran on Veterans Day.